Hey, everybody, welcome. You're not dreaming or hallucinating as AI is prone to do. That's actually Paul Krugman, Professor Paul Krugman, and a great friend to economists like myself everywhere, and to his millions of readers. And of the many, many things I love about Paul, uh, near the top of the list is his generosity to share his time with us. So thank you for being here, Paul.
Well, thanks for having me on. Always fun to talk to you and hopefully enlightening.
Well, let's see where we go. As usual, so welcome to Let's Do Lunch. Thank you to Lily Conway, Julia Payne for helping us get here. And let's jump right into the questions. Michelle says, if we were to be so lucky for the Supreme Court to rule tariffs as unconstitutional, would all the money already collected have to be given back? So there are numerous levels to that question, including this Supreme Court issue to be argued tomorrow about IEPA, the International Emergency Economic Powers Act, and whether Trump is violating that law with his sweeping tariffs. Paul, why don't you take it, and I'll jump in your wake.
Oh, yeah. So this is about 70% of the Trump tariffs have been justified by invoking IEPA, which is, it's clear, whatever the Supreme Court may say, it was clearly illegal. The law was intended to empower you during an economic emergency. And um, we know that the economy is in great shape. Everything is terrific. And we know that because Trump says it is. And well, I shouldn't. You shouldn't be able to simultaneously say everything great and we're in an emergency and I have to be given all of these extraordinary powers. So God knows, I don't know what the court's going to do because they had it's a very, they've been very deferential, to let us say, but this is so clearly a misapplication. It may be beyond even them to rationalize. And yes, the money must be given back. The government can't go out and tax people and then say, "Oh, I guess that was illegal, but we get to keep the money." So yes, it does have to give the money back, which is a whole other level of complication. Um, so we can go on. I mean, they will try, if the court does rule that they can't do this, they will try to use other provisions for to rationalize, but those are also extremely legally vulnerable. I mean, a lot of the stuff. Sorry, I'm going on too much, but a lot of the stuff that Trump has been doing is under Section 232, national security. And the latest national security tariffs I think he imposed included um, bathroom vanities and upholstered furniture. So,
Also recall that as part of the national emergency, it was apparently someone quoting Ronald Reagan in a way he didn't like.
that's right. The province of Ontario ran an ad quoting Ronald Reagan accurately about the virtues of free trade, and Trump slapped a 10% tariff on Canada because national security is threatened if we accurately quote former presidents in a way that makes Trump unhappy.
Let me take a piece of this to an area of substance that you know very well, and I think would be interesting to our audience. One of the rationales that the Trump administration gave for a national emergency under IEPA, and by the way, I couldn't be more in agreement with you, and I think the court would have to bend itself into an even bigger pretzel than it's bent itself. I'm sorry about the Supreme Court conservatives, to an even bigger pretzel than they'd bent themselves any time heretofore to find this one to be legal. Uh, but in citing the emergency, Trump cited the trade deficit. Now, you know, we've had a trade deficit since the mid 1970s. Um, and I think we can both scoff off this idea that it's some kind of a national emergency. But more interestingly, say a little bit about how problematic or non-problematic a persistent trade deficit of the magnitudes we've had are in your thinking.
Okay, it's really, really hard to make the U.S. trade deficit, and specifically the U.S. trade deficit, a problem. It is possible. There are such things as balance of payments crises, currency crises. I've devoted a significant chunk of my research career to those. And the United States is, despite the trade deficit, as invulnerable to that such things as any country can be. I mean, currency crises happen. What? the typical case now is where you have a lot of debt in dollars, which is a real problem if you're Argentina, but it's not a big problem if you're America, right? We print the dollars. So there's really no way to make the trade deficit. And if we were suffering from mass unemployment, then maybe, and we had no other way to boost it, then the trade deficit could be contributing to that. But we're not. The unemployment rate is fairly low, and we have plenty of other tools if that should become an issue. So there's just no way unless you just start from the assumption that trade deficit bad. Then this is not any kind of emergency.
Yeah.
Um,
Yeah.
I long an answer, but also, Trump is imposing, particularly after this latest, basically folding to China that he did. We're now imposing tariffs that are in many cases higher on countries that have more or less balanced trade or even deficits with the United States as we are on countries that have large surpluses with the United States. The tariff on China is about the same now as the tariff on the European Union, which, if you include services, has roughly balanced trade with America, slight surplus, but not a big one, and much below the tariff on Brazil, where the only thing they've done is have the temerity to actually try and convict a former president who tried to overturn an election. So this is crazy.
Yeah, by the way, the tariff, when you say tariff on Brazil, I'm reminded about something that has gotten under my skin in ways that you and I used to talk about when I was in the Biden administration, which is the tariff on Brazil very much is very closely related to the fact that coffee prices are up 20% over the past year. All right,
Yeah.
this is, in fact, here's what we're going to do. We're going to go to a question that I was going to do later, but is germane to this part of the conversation. Let me just find it. Sorry. Um, oh, okay. This is from Janelle. How successful were Biden's policies in controlling and reducing inflation compared to the rest of the world, and Trump's current policies on those effects on inflation compared to the world? I'm not exactly sure what Janelle means, but where I'd like to take that, Paul, if you're willing, and of course take it wherever you like, is comparing the effects of Biden policy, of which I was admittedly a part of, on inflation, and Trump policies on inflation. Let me kick this off. Uh, I would argue, I've long believed that of the very significant increase in inflation, say from 2 to 9% from pre-pandemic to its peak in 2020, 2021, 22, that the fiscal interventions contributed a point or two to that 7-point increase. So you went from 2% to 9%, and I think that the collision of constrained supply and strong demand, of which fiscal support played a role, is partially in play there. And there's some arguments about that, but 1 or 2 points is, I think, a fair consensus. When it comes to Trump, I think the tariffs impact on prices is, quite direct and not particularly mysterious. So why don't you give us some of your thoughts about that?
Yeah, I mean, what I always like to do is compare um, the inflation experience of the United States with the inflation experience of other countries. And if you take the euro area, which did not have a Biden level fiscal stimulus, so it didn't, had quite different policies with the United States, and you're careful to use comparable price indices, which is one of those things, you need to use the harmonized index of consumer prices, not the consumer price index, which looks very, anyway. Um,
Hmm.
what really just jumps out at you from the chart is uh, they look the same. The European inflation peak was about the same, about as high as ours, came a little bit later, but at a basic level, the whole Western world had a spike in inflation the world economy recovered from COVID and we ran into all these supply bottlenecks. Um, we can say, I mean, if you try to run it through a model, the Biden, the American Rescue Plan should have made that inflation spike a little bit higher, but you don't see it really. It doesn't pop out at you from the data. But I'm willing to believe that there was something in there. And what's really striking is that it came down drastically, rapidly, painlessly. We had this immaculate disinflation. So, from the point of view of God, the world went through hell with lockdowns and disruption and supply chains, and a lot of people, some of them named Larry, were saying this is going to be a horrible, years and years of pain, and instead the inflation just sort of evaporated, and that looks to me like it's actually a policy triumph, though nobody will believe it. Now, the Trump tariffs, are clearly having a direct impact on prices. Now, it's a little bit a little bit slower than we thought it was going to be, but and there's a whole we can go on and on about why that's been, but it's pretty clear. Um, and I'm going to do what kind of thing I hate, but the anecdotal. Um, I was traveling for a while, and then my wife was away for a while, and so we reunited for our first big food shopping for a couple of months, just 2 days ago. And I don't know. I mean, I'd love to get some data and but God, it looks feels to me as if food prices have gone up a lot in the last few months. So, but anyway, no. So, no question that Trump is following clearly inflationary policies, and Biden, did a lot of aid in early in his term, which may have contributed a bit to inflation, but not on a sustained basis. So, uh, there's no comparison in terms of, responsibility.
Yeah.
For
I think that's I agree with that analysis, and particularly vis-a-vis tariffs. And I know that there's been a lot of economists saying what you just said, which is maybe it's been less the pass through from tariffs to consumers has been less than some people expected. And I was pretty careful myself out of the gate for the following reasons. We import 11% of goods in this country. If you go to Europe, that's more than twice that. 25, 28% share. If you go to China, Asia, other countries, you'll find much higher import shares. Other economies are much more exposed to the rest of the world than we are. At the same time, consumers have been a lot more price sensitive in recent quarters and months than they were before. And that means that it's harder for firms to pass prices forward. But the thing that got under my skin that I referenced a minute ago, and I know you've had the same sensitivity, we're just going to veer for a minute into media venting, so I don't want to spend a lot of time on that, is back in my day when I was in the Biden administration, there was literally not one interview I did where this question of Biden's impact, our impact on inflation, didn't come up. Meanwhile, everything you just said was true about the more nuanced nature, the role of the pandemic. I'm not saying fiscal support didn't play a role, I'm saying it did, but it was at the margin, whereas now we have direct connections between a tariff on Brazil and a 20% increase in coffee prices. And I really hear very little of that coming at these folks from a lot of the folks out there. And I don't know, Paul, I don't want to just have a chip in my shoulder, but what do you think?
No, I think we were constantly bombarded during uh, previous administration with, don't tell me what the rate of inflation has been over the past year, which was already quite low by 2024, but prices are way up from what they used to be, and that's what has people upset. And well, prices continue to be way up from what they used to be, more so than ever, and in this case, Trump specifically promised during the campaign not just to reduce the rate of inflation, but to actually bring prices down, which has absolutely not happened, and hardly ever held to account for that. And then we could talk. We don't want to. I think probably spin this into a media discussion, but there really is a kind of a double standard, as if people were looking for reasons to be down on Biden and are looking for reasons to not critique Trump, and that includes allegedly liberal media. So, yeah, it's
I just want to underscore something Paul said because it's something that, again, economists don't deal with quite enough, in my view. And that's the difference between inflation and the price level. So what we're constantly going on about is the rate at which prices change or inflation. And, I myself used to go out there to the cameras at the White House and say, inflation was 9%. Now it's 2%. Hooray. And people were like, well, wait a minute. All you're saying is that these prices that I don't like, the level of what I'm paying for a bag of groceries or a dozen eggs is going up more slowly. But damn it, I remember what they used to cost and I want my old prices back. So that's a price level concern. And that distinction is very important when you're worried about affordability. Tariffs, at least from the Fed's perspective, don't necessarily raise the rate of inflation more than a one time kind of thing because they're supposed to be a one time tax, although they never seem to be that way because the Orange Menace continues to negotiate. But they do raise the price level, and that pushes it exactly the wrong way regarding affordability.
Yeah, and it's now there has to be a statute of limitations. I don't think there's a lot of people out there pining for the days when a McDonald's hamburger was 15 cents, right? But people certainly, there was a definite one time jump in the price level, 2021, 2022. Which then did not continue upwards, but did not come down for the most part. And people professed actually right now people are very upset too. I mean the inflation rate is about 3% over the past year, which is uh, a little above the 2% that has become established as the norm. But People are very down. People are very upset about affordability. The consumer sentiment numbers are as depressed now as they were at the peak of the post-COVID inflation. The media is focusing on it, but the people are still noticing that stuff. And of course, there is a problem here because we do know that um, uh, as of late 2024, uh, prices were a lot higher than they'd been pre-pandemic. Wages were even more higher than they were pre-pandemic. So people's purchasing power was clearly up. But there is a unavoidable thing, which is if you get a pay wage increase, you think you earned it. If the price of what you buy goes up, you think that was done to you. And
Exactly.
uh,
Yeah.
all right, let's-
Listen, let's get on to some other questions. I was going to go into something about incomes and the role wages and incomes play, but you just did that because somebody was asking about that. I do try to read the questions that go by very quickly. And someone said, well, what about incomes and wages? And of course, they're important too, but I was just going to say what Paul said, which makes me feel good about what I was going to say because Paul said it. So it's right. Okay. Uh, Here's a question from Albert that I think is very timely. Something I wrote about this morning on my own Substack. We keep hearing about shakiness in the economy. Amazon just started a big round of layoffs, Target, Paramount, UPS. Yet the job numbers seem to be generally fine. Asterisk, we haven't seen them since August, which sucks, but that's a different discussion. What explains the disconnect? Paul?
okay. The main thing to always hear is just how big America is. It's a we've got 160 million or so workers, and it's constantly churning. More than a million people are laid off every month, even in good times. Right, so you can see all these numbers, and they add up to first of all, most of them are planned layoffs, not stuff that's happened yet, or intended layoffs, not even necessarily planned. And add them all together, and I don't think they add up to 1 month's normal layoffs. So these may be exceptional. To a certain extent, they may even be companies trying to goose their stock price by promising to investors that they're going to achieve wondrous cost savings through the magic of AI. So you don't want some perspective. And now the labor market is actually a lousy labor market, but not because we've had mass layoffs, not yet anyway. It's a lousy labor market because companies aren't hiring. The firing is maybe just starting, but hiring has slowed to a crawl. So good luck if you've lost a job or you're a young person just entering the market. Things are bad, and you can really see that. So. Um, But yeah, I mean, the main thing always with these, this is our colleague and usually friend Dean Baker uh, is always saying never ever present a number about America without context. How big is it relative to the thing and relative to the size of our labor market, relative to the number of people? I mean, and by the way, it's not saying that being laid off is fun. It is not. It's a tragedy. But that's a tragedy that's happening to a million people every month, almost, even when times are good.
So listen, again, you've spared me from saying much because those were all my notes too. Anecdote versus data, but I did want to underscore something you said that I think is really, really critical, which is you always, as Dean says, and I really do try to implement his edict here. You always want to be contextual here. There's 170 million people in our labor force. The number that matters to anybody who gets laid off is one, them. So neither of us are discounting that. We're trying to answer Albert's question about the bigger picture here. I wanted to drag you in, though, a bit, Paul, into this thing I wrote about today. It was a really great episode of The Daily on the New York Times. That's their podcast yesterday. And it was all about robots replacing workers at Amazon. And everything we've said fits into that conversation. This is still at the level of, thousands or tens of thousands in a labor market of 170 million. But there is a question to which AI will disemploy workers and what we should do about it. Historically, people like us typically want technology to be complementary, to be, to help boost people's productivity versus replace those people, displace them. But displacements do happen. And I wonder if you have any thoughts, not so much in the present, because who knows, but in terms of AI as a different, potentially more disemploying technology than we've seen in the past.
Okay, I have my doubts about whether it's more than in the past. We need to see. But what people don't realize, I did have a Substack a couple of weeks ago about all of this, and um, large scale displacements by technology happen all the time. And so, the I think you today had talked about telephone operators. My one was typists. Just before personal computers appeared on everybody's desk, there were around a million typists. There's about 40,000 now, according to the BLS. At least, probably some other people do some typing, but basically that has disappeared. Um, that's a lot of people, even for the United States. The question is when. Sometimes we think of this as a big problem, and sometimes we don't. Um, and in the case of times when it's a problem, are usually either that the technology destroys a kind of localized industry. So a community, communities lose their reason for being. Uh, Believe it or not, coal mining. Most of the coal jobs went away before we sort of started reducing our reliance on coal. It wasn't the environmentalists that did it. It was using high explosives to blow the tops off mountains that did away with coal miners. The the, so on the other hand, typists were, there were typists everywhere, and so it's kind of a diffused thing, and people found other jobs. Um, the other thing is, on a grand scale, if you have technological change that's biased against labor towards other things, and uh, so there's this endless, fundamentally irresolvable dispute about whether real wages actually fell during the early stages of the Industrial Revolution. It's irresolvable because the data aren't great for the year 1815 in Britain, but but it's clear that that the fact that we can even be arguing about that question is telling you that the Industrial Revolution's initial gains were not widely shared, probably because the technology was we're going to replace home production, people, hand loom weavers in their houses with factories, so it was capital biased. And AI so far does kind of look like that, right? We're replacing maybe a lot of maybe even like warehouse workers with giant data centers, and so the possibility. I don't think that mass unemployment is still very unlikely, but downward pressure or at least stagnation of real wages, maybe
Yeah.
it's. Oh.
I think that's certainly possible, and we just it's too early to tell. But my what I always advise in cases like this is to hope for the best and plan for the worst. Now, what does that mean in this context? So historically, as Paul just took us through, if you look at the history of productivity, which is how much we produce per hour, closely related to improvements in technologies, that just goes up pretty much year after year. And does employment or hours of work go down because of it? No, it keeps going up too. The two trends kind of track each other over time. They both go up, and the intervening variable is just more demand, more jobs in areas and occupations we didn't know about. However, that's the hope for the best. The plan for the worst part is where Paul landed at the end, and where this Daily Show yesterday really goes through, which is that, and the telephone operator example is a good one. When the electronic switching came in, very quickly, a bunch of people, exclusively women, by the way, were disemployed, and many of them couldn't find their way back into the job market. So I suggest that we consider a jobs guarantee program. It's a whole nother conversation that we don't have time for now, but it's to me it was it's an ambitious thing, and for a Congress that can't keep the lights on, it's not going to happen with this group. But at any rate, read my Substack and see what you think. And of course, I assume you're reading Paul's. Listen, we've got 3 minutes left. Let's quickly get into this thing, because I personally am interested in your take on this. I know you've written about it, but I'd like to hear you say a little bit more about it. Um, Andrea says, are we in an AI bubble? Is AI in a bubble? Ryan Cummings and I wrote an op-ed for the New York Times on this point. Paul, what do you think?
Well, I think we probably are, although the one thing that gives me pause is that so many people are saying that it's a bubble that you might think that it would be deflate. Everybody says it's a bubble. But it is really hard to come up with plausible stories about how these investments will yield enough revenue. Not that that AI is a useless technology, but it's really hard to make the numbers work. And the level of hype, despite all the people saying bubble, the level of hype definitely. I think you remember the late '90s, and I certainly remember the late '90s, and it does have that same feel. So probably, and one big difference actually, one way in which this is worse than the '90s. The '90s, there were a lot of investments, putting fiber optic cables into the ground, which then sat unused for a number of years, dark fiber, but eventually became useful. So the bubble of the '90s was useful. These data centers that are being built are not going to be usable 5, 10 years from now. They'll be outmoded. They will have decayed. So if this really is excess investment, it's more like shale, where a lot of resources were sunk and then rapidly depleted. And so uh, probably now some of it will survive, and somebody will eventually get very rich off the potential of AI, but it might not be any of the companies that are currently having gigantic stock valuations.
So which one should we be betting on? Just kidding. That's not a real question. um, hey, listen, I want to give you a difference between the current potential bubble and the '90s, where this one looks a little better for the following reason. Although I'm updating my priors week by week on this. And it's not actually, I'm not comparing to the '90s bubble, I'm comparing to the housing bubble. The housing bubble was leveraged by a bunch of deeply squirrely securities. That is, a lot of toxic assets that were kind of prone to blow up as soon as the investment scheme became clear, where people who were owning houses couldn't possibly pay for them once their mortgages reset. And then that cascaded through all this debt that had been leveraged up to support the housing bubble. So there was a financial dimension to it that literally took down the global economy. Much of the investment in AI looks like it's driven by cash flow to many of these companies who are very deep with cash flow. And that's what Ryan and I wrote in our op-ed. Since then, and I'm talking about the last few weeks, I've learned more about debt financing, but of AI investment. So now I have something else to get more worried about. But I do think that perhaps we're more insulated in that regard. Paul, do you have thoughts about that?
The housing bubble was unique in the amount of to the extent of which leverage and financial instruments nobody understood was underpinning the whole thing. But as I said, there's been a transition. 6 months ago, it was clear that AI was being paid for out of cash flow of existing highly profitable companies. That's not clear at all now. At this point,
Right.
look, piling up a lot of debt. There's also a lot of very squirrely sort of cross investment. It's the
Mhm.
Going the kind of circular flow of funds among the AI players are extremely hard to figure out, which is not a good sign. And I would just add a little something that you may not have noticed, but um, from in the U.S. we talk about all of the complicated securities and subprime and about all that stuff, and that the exoticness of the financial instruments is was key. But the Europeans managed to have an almost equally bad housing bubble crash,
Mhm.
nation while making very little use of that. They were using much more conventional instruments. It was mostly wholesale lending among banks. It was German Landesbank lending money to Spanish cajas with none of this fancy algorithms, and they managed to screw up about as badly as we did.
And
So
yet China had a housing bubble too. Yeah. Um, Paul, we lost you there. You still there?
yeah, I still hear.
Okay, good. Yeah. So, I just want to say a word about the circular financing. But thank you for the reminder about Europe and China as well. You don't have to have squirrely financing to have a housing bubble. Apparently, if Safeway lent me $100 a week and I kept going there and buying groceries, and they kept lending me $100 and I kept buying groceries. Our balance sheets would look okay for about 5 minutes. And so, because a couple of people asked about the circular financing, and I do think that that closed system is probably another symptom of potentially bubbleistic financing. That's a word I just made up.
Yeah, that out there is alongside this AI stuff. There's also more than $3 trillion worth of crypto which has yet to find any legitimate use in the economy. So there's another dimension to all of this that if things start to go really bad, then um, so when the house falls down, that's when you find the skeletons in the closet.
Yeah.
When
Crypto is an accident going on to happen in this regard in terms of systemic risk, and stable coins are even more problematic because there was recently legislation passed that's going to lead to a whole bunch of banks releasing their own stable coins. They're all going to be backed by US treasuries. And the minute some of those stable coins, which are uninsured, they don't have FDIC coverage, one of them breaks the buck, everybody redeems them, you have a fire sale on treasuries and, it's bailout nation.
Yeah, it's the um, whenever you have again, I think the point is once people have gotten into irrational exuberance, they will find ways to create all kinds of systemic risks. And um, when the thing comes crashing down, it will be obvious, and we'll say, why didn't we see that particular disaster happening the way it did? But and of course, it's not obvious now. But I'm worried. So of course, I'm worried about a lot of things.
Well, I usually like to try end on an upbeat note, but we are well over time here, and we can keep going. And the fact that you're worried about and I'm worried about things is I think a very positive sign because if you're not worried, you're not paying attention. Massive thanks to Paul for joining us again. We've had 3,500 people here. That's a record for us. So thank you, Paul. Love to get you back here again soon. Last word to you.
Yeah. Look, can I say, meanwhile, if you want something optimistic, here I am in the middle of New York, and it is not a dystopian wasteland of crime. It's actually day, and people are out, and the parks are full, and life goes on, and there's still a lot of good in the world.
I love that. There is. There is. Well, thank you so much, Paul. We'll see you next time. Thanks, everybody. Bye bye.
Take care.